Bank of Canada is between a rock and a hard place. In other words, they have no clue what they're going to do because
we can't see what's happening.
So the point of it is that I think that ultimately they're going to have no choice but to bring rates down a bit more.
But my question is then when inflation kicks in, because that's what tariffs does, tariffs kick in inflations, their mandate is not to control the economy. Their mandate is to control inflation. And I think there's no doubt they're going to raise rates.
Here's the thing. Interest rates are not going to impact that type of inflation. In other words, they can have the tariffs and then raise interest rates because inflation's going up, but it's not going to change the tariffs. So in other words, there's reasons to lower rates with inflation because it's driven by consumerism and it's driven by demand.
Despite people getting concerned and people, have lots of right to be concerned and so on and so forth, where do you think interest rates go from here, Patrick? Because interest rates will lead to some interesting opportunities in the real estate market, because it is the number one cost we have as real estate investors is interest. And interest rates are heading in the right direction for us.
Well, and we know that, ultimately interest rates are influencers in the world of real estate, and they do have a high influence. I don't know where interest rates are going to go, to be honest with you. I think that bond yields are right now, they've come down a little bit, but given what's going on economically, global macro again, even North America, as in US and Canada, I think we could see bond yields either flatten or even spike up a little bit. I think they're going to be a little volatile or continue to be volatile. So what does that mean? It means fixed rates are still going to be, I think, kind of in the low 4s, high 3s is where you're going to be able to get a mortgage. And you're going to have to make a decision. Will variables come down a little bit more? Bank of Canada is between a rock and a hard place. And how can you even look out 90 days and say, what are they going to do? They're literally what seemingly is they're, waiting to the last minute to even imply what they may or may not do. In other words, they have no clue what they're going to do because they don't, we can't see what's happening. So the point of it is that I think that ultimately they're going to have no choice but to bring rates down a bit more. I think ultimately when we see April 16th, that's what's going to happen. Probably a quarter basis. Some are actually calling for half. I think that's being a little bit much. I think they're going to be more strategic in that quarter point. We'll see it come down. And so, yes, from an investor point of view, listen, that's a good cash flow move. But I think at some point, JG, I think investors, people in general, are going to have to look at locking in, because I think that.
Well, I'm glad you went there, Patrick. That's exactly what I wanted to ask you, because I think there's a moment here, and I know this is what I'm actively looking into right now, but I do think rates, I think no doubt Bank of Canada is lowering the next one, in my opinion, and probably the one after that. But my question is then when inflation kicks in, because that's what tariffs does, tariffs kick in inflations. We know that's probably most likely going to happen. The odds are definitely that's going to happen. Then the Bank of Canada is in a really tough spot. They're not in a quite tough spot yet, but they know they're going to be in a tough spot. And they've already said their mandate is to control inflation over everything. Their mandate is not to control the economy. Their mandate is to control inflation. And I think there's no doubt they're going to raise rates. So my question to you is where do you think we end up in 3 months from now? Do you lock in while you kind of listen, if you got rates in the high 3s, low 4s as a real estate investor, that's not bad. That's pretty good. Don't think it's going back to 2% here. That's pretty good stuff. Do you lock in or do you play the gamble? What do you think?
Well, I think first and foremost is that if you're going to go with a variable rate, that's fine. I know that I'm still waiting to make some decisions on some mortgages that I've got that are renewing over the next few months. But ultimately, here's the thing. I don't want to say ultimately again, because it's not that. Here's the thing that we have to consider. If you're going to go variable, you better be paying attention to what's going on. You cannot kind of set it, sign the mortgage docs and forget it, because you could definitely get caught. But I think that to your point is that inflation is going up. But what's going to drive inflation? And you said it yourself. Well, tariffs are going to drive inflation. Here's the thing. Interest rates are not going to impact that type of inflation. In other words, they can have the tariffs and then raise interest rates because inflation's going up, but it's not going to change the tariffs. So in other words, there's reasons to lower rates with inflation because it's driven by consumerism and it's driven by demand. Tariffs are not driving demand, they're just driving costs, which is the inflationary side of it. We look at, for example, you look at how expensive it's got to exist in this country, and we see wages going up 6%. Where do you think that 6% is going to end up? It's going to end up on the cost of things. Now, interest rates, again, are not going to bring that down. So this is where the Bank of Canada really gets into a tough spot. And here's what we haven't said, and I've talked about it many times, and that is the construction industry, particularly in Vancouver and Toronto, is only just getting started in terms of the meltdown. You're going to see unemployment go up in that construction industry for sure. They're not building anything new. They're finishing projects. It's already starting to tick up, JG, and it's only going to get worse. So it's all to say that the Bank of Canada, if they raise rates, we are then really into a stagflation environment where you've got high interest rates, a slow economy, cost of goods are have gone up significantly. This is not a good scenario that could be unfolding. So Bank of Canada is in a tough place.
A very, very tough spot. I agree with you, Patrick. And it's going to be interesting. I mean, I think as investors, we have to be pretty, heads up at this time right now, because after what we just went through with rates doing what they've done, and if anybody didn't have their finger on the pulse, and I think everyone, even you and even myself, Patrick, we didn't lock in as much as we should have when the rates were super low, and everyone suffers from the same thing, which is when rates are really low, they think they're going to go lower. And then on the opposite side of the curve, which we just gone through, is when everyone thinks when they're going up, they're going to stay high forever, but that's not the way it goes. So like they're coming back down, and they're kind of in that like high threes, low fours, mid fours for an investor. That's a good rate, Patrick. If most people can make money at that rate in the rental business, it's not a bad rate. You don't have to have 2% in order to drive your rentals.
No, for sure. But here's the other side of it, JG, is that there's a lot of stuff that let's be really clear. We've talked about the condo market to nauseam, but it's also what's driving a lot of consumer sentiment, because all they're reading is the headlines about real estate being down. Listen, what's starting to really happen right now, for example, is listings are going through the roof, but sales are not. So buyers are still not coming out. What is starting to happen slowly but surely, and we've said this, again, ad nauseum, is invest in detached. Multifamily is yes, single family, yes, but is a multi. So in other words, duplex, triplex, fourplex, if that's the game you want to play, or you get into multis, 5 units and above. The point of it is that now we're starting to see negotiations open up and opportunities open up for investors to come in and do some deals on that. Now, there's not big, huge discounts on it, and but there is a lot of motivated vendors that are now coming into the market, and this is really the opportunity. And we've said it before, and I think it's only going to continue in that vein, is that investors are going to have time to write offers, to go snooping around, find deals, write those offers, and get deals done. And that, I think, is the key to all of this, is being strategic and looking at what type of asset class in terms of real estate are you investing in. Condos, let's just pretend we don't even talk about them anymore. So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.